balance of risks is shifting as global expansion matures. This is an inevitable feature of the cycle. There's less concern over downside risks to growth, and of course more concern over upside risks to inflation. Reality changes more slowly than market attention. Remember, it was only a couple of years ago that markets had a deflation scare. That never seemed realistic to us, and similarly, fears of runaway inflation are overdone. Still, you cannot hide from the fact that inflation is rising as excess capacity is absorbed. Now, policymakers are going to welcome this, but they also need to respond. In most cases, inflationary pressure is still subdued, so there's no urgency in the policy response, but we will see tightening right across the developed markets through this year. The US Central Bank is facing the biggest challenge. Congress just passed an expansionary budget right on top of the stimulus that's coming from tax reform at the end of last year. Now the cycle is already mature. There's certainly no need for a fiscal boost. It's just going to add to the inflationary risks, perhaps a classic boom-bust cycle. It also increases longer-term challenges, maybe a fiscal squeeze in 2020, and certainly less ability to respond to the next downturn. More generally, the theme of rising inflation and broad monetary tightening is likely to be the dominant market feature until we start to anticipate the next recession. Fortunately, that's still well in the distance. Maybe it's a question for 2020 at the earliest. But at the moment, the overall cycle still looks very solid.